Monday, February 18th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about the Economist magazine and their case for gold, which is very unusual. This week's publication or edition on the section called Buttonwood. There's an article called Catching the Gold Bug. I'll talk about that. I'll talk about the FT, how in the past they've disparaged gold. I've spoken about that a few times. And I'll talk about briefly about George Washington. Today is a public holiday or a federal holiday in the U.S. It's George Washington's birthday. I think it's also called President's Day. The markets will be shut. But the futures market are trading this morning. Europe is open. The foreign exchange market is trading. Gold is trading. So we'll look into that. George Washington, the case, the Economist's case for gold, and the FT. Before I do that, of course, let's quickly look at what the markets are doing so far this morning. It's just gone past 7:30 London time. We've got spot gold at 1323.40, so up about $2. The high has been 1325.50 and the low 1320.39. I just want to quickly show you charts of gold. First one here is the daily chart. You can see how since August last year when we hit 1160, the low in gold last year, we've been kind of, the market terminology is climbing a wall of worry. I mean, we're $160 above that level, and it doesn't feel like, sentiment is very good for gold. But it's continuing to climb this wall of worry. And you can see here as well, since, let's see, the low in November, we've had like it's like a little, I think Jim Sinclair calls it the Swiss step. So you get a move up, then you consolidate. It looks like it's going to go down, but then it just keeps going up, consolidates, up, consolidates, up, consolidates like a little step up the ladder. And right now, the key level, of course, is going to be 1326, which was the high from the 31st of January. And I'll show you now a monthly chart so you can have another idea of how important that level 1375 is. I mean, for the last 5 years, that's been the upper bound, upper barrier for gold on the upside. And the monthly chart looks weird because we're right near where we opened the month, and we're right near the highs. So if we can get through 1326 in the next 10 days, it will be very positive. We could see a move up to 1375 very quickly. Silver is at 1580, up 2. Silver as well, I'll show you a chart of silver, why it's looking pretty good. It's a little different. It has underperformed gold, of course. The low from 2015, December 2015, was at like 1366. The recent low here in November 2018 was 1387. So you could say this is a massive double bottom, and I think it is. And then we've had the breakthrough above 15. That's been very positive, and you can see we're above. We've broken through also this falling wedge. So yeah, in silver, I guess 16 now. And 1620 are the key levels on the upside. So that's the precious metals. The stock market, as I said, the futures are open. Despite the public holiday, the Dow is up 34 at 25,910. S&P 500 is up 2, so almost unchanged. NASDAQ 100 futures up 11 or 0.16%. The pound is up 0.2%, just above 129, 129.13. The euro is up 0.15, 113.09. And the dollar is virtually unchanged against the yen at 110.54. Dollar yuan also unchanged, 676.83. Crude oil, wow, crude oil is doing well. We've broken through 55. We're comfortably above that level at 56.40. It's up almost 1% this morning. Brent is the spread with Brent is quite wide. Brent crude is at 66.61, so that's pretty significant there too. Bond markets are closed today, the Treasury, so I won't report on that. So first of all, let's just cover George Washington quickly. So his birthday was February 22nd, 1732, and he died December 14th, 1799. Of course, he was the first president under the Constitution of 1787, first president of the, how can I say, the independent colonies was a guy called John Hanson. So I don't know if you guys know that. Just wanted to put that out there. Yeah, I read this book here many years ago. An Imperfect God, George Washington, His Slaves, and the Creation of America, Henry Winchek. Why? You know, the slaves. He married a widow, Martha Custis. So she was, you know, her husband was very wealthy, landowner. She was the one that owned Mount Vernon and had a lot of slaves. So he, you know, back then when someone married a widow, the man took over everything actually. So George Washington freed his slaves, I think, if I'm not mistaken, in his will when he died. Maybe not all of them, but quite a few of them. The other thing about George Washington, which I found out last year when I went to the Bank of England Museum, is that even during the Revolutionary War, because of the ownership, through his wife, he was a shareholder at the Bank of England, and he inherited that from the estate of his wife's husband. So that's quite interesting. But for me, the most important that when I think of George Washington are two quotes or comments he made. One of them at his farewell address about entangling alliances and foreign policy, which is, I think, for the last 100 years, American presidents haven't really followed his advice. It's not in the Constitution or anything, but it's the advice of arguably the most important founding father. And he says, "It is our true policy to steer clear of permanent alliance with any portion of the foreign world. Peace, commerce, and honest friendship with all nations, entangling alliances with none." So I thought that was very important, what he said. And that's why Americans, up until the First World War, were very isolationist. So the powers, the globalists, had a very tough time convincing Americans to get into war. It took them 3 years to convince them to go into World War I. So I think that's really one of the major, I would say, contributions of George Washington. The other one is about political parties. I'm not sure if he made this comment also at the farewell address, but he says, however, political parties may now and then answer popular ends. They are likely in the course of time and things to become potent engines by which cunning, ambitious, and unprincipled men, we can say women now as well, will be enabled to subvert the power of the people and to usurp for themselves the reins of government. He was warning about political faction in a republic. Both these warnings haven't been listened to by Americans in general. Is it been willingly? I don't think so. Anyway, so what about the Economist? They're making it, they say here, catching the gold bug. Buttonwood. When trouble strikes, where should you hide? The case for holding gold. Before I go into the Economist, I just want to show you this editorial from the FT from April 2004. So almost 15 years ago. And I've told this story quite a few times. I'll tell it again for the new viewers. I was going to work around 6 in the morning. I was waiting for my train at the platform to go into the city of London. And I bought the FT, and I usually turn the paper first. I quickly browse through the headlines. Then I quickly, turn the paper to the editorial page. I like to read the editorials. And I saw this editorial, Going Gold. The pointlessness of holding bullion continues to sink in. So that's how the mainstream media, FT, Economist, that's their their mentality towards gold. They're, of course, in bed with the banking cartel, the central banks, the International Monetary Fund, the BIS. These people are all like part of the globalist group. So at the time, I even wrote that gold was trading at $400.65. So just quickly go through here. Basically, they say that it's useless holding gold, that there's no inflation, there's nothing wrong. It's a useless exercise. And then, they say it towards the end, and I'll read. Given the pointlessness of holding gold, the speed of its official sell-off scarcely matters unless leaching the gold into the market bit by bit somehow maximizes the return to the public purse by limiting the impact on the price. That would imply some irrationality on part of the market, but then holding gold is irrational in the first place. Perhaps the central banks are right to go slowly. Whatever the speed, the direction is clear. Gold is on its way out as an investment and a reserve asset. 3 cheers for that. Well, very irrational that, for the last 5,000 years, people have been holding gold and silver. I guess all our forefathers must have been irrational. But anyway, so Buttonwood, let's go through this article. So this is what the Economist is saying. When trouble strikes, where should you hide? The case for holding gold. So they're basically saying that they think the dollar trade is too crowded, and should that the dollar could go down against the other major fiat currencies. I kind of agree with that. I've said a few times in the last few months that I think the dollar index topped in 2017 at 103.82. And we have on average 7-year cycles for the dollar, and that we're now in a downward cycle at least till 2024. Where the dollar index will go is difficult to say. There are some people, I think a guy called Brent Johnson, he's got the milkshake theory. He thinks the dollar index is actually going to go higher, but so will gold. He could be right. I don't know. But the cycles are telling me that the dollar's topped, and also the fundamentals now with central banks, especially the Fed, backtracking on reining in this these trillions and trillions of dollars of this zero interest rate policy. They've seen that they're cornered. The policy of the last 10, 11 years of easy money printing, zero, sometimes negative interest rates, hasn't worked. And if they try to reverse it, it's going to implode everything. So that's another reason for holding gold, in my opinion. So the other thing they say is that inflation, the phony measure of CPI shows that why gold hasn't done as well, because there's been no inflation, which is rubbish in my opinion. But so they say here, now as then, there are growing concerns that the dollar is a crowded trade. It is as if there are so many people in the Grand Central Station that it is impossible to find the person you're supposed to meet there. Or if you do find them, you cannot find your way out without mishap. It is why gold is starting to appeal again as a spot to converge upon. You would have to mix with some strange people there. Well, that's us. They disparage, they call us gold bugs, even though we're just for sound monetary, for sound money, sound monetary system. You really say that you would never visit. So there you go. That's the story here. If you want to read it, I guess you can pause the video and have a read of this story. So if you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. Make sure you also hit the notification bell so you're notified of my videos. You can also follow me on Steemit, DTube, and on Twitter. I wish you all a great day. Take care. Bye.